I'm Deborah Borchardt, and this is your midday market update. Well, we started the day in fairly positive territory in the green, but things have changed. We are now starting to see some more selling, kind of continuing what we've seen the last couple of days. If you feel like you missed your chance to get out of this market, well, Mark Newton from Greywolf is saying when you see a rally, that's the time to take a little bit off the table and protect some of those profits that you had. He's also seeing a lot of things in this market that are making him feel fairly bearish for the next 4 to 6 months in that kind of time frame. I mean, you're seeing overbought, indications. You're also seeing, not a lot of momentum.
Yeah, let's focus on the intermediate term. I mean, we rolled over the last few weeks. We've had a 5% correction. This has been one of the biggest rallies off the lows of '09 that we've seen in some time. I think it's the 6th largest rally. We've been up 140% so time. So we are fairly late in the game. We're stretched. Being a post-election year, typically those are the worst of any of the 4-year cycles of the presidential years. So that's also a concern. We've been up, it was at one point 16 to 17%. Now we've backed off a little bit. The last couple of days, we saw 2 consecutive 90% down days, and that's never encouraging to see the majority of the volume on the downside, also more decliners and advancers. Some people might look at that as being potential capitulation. My own thinking short term is that we move down 70 points, we might see a shot at a bounce, but we certainly haven't seen it here. Near term, 1575 to 85 does have some importance for short-term traders. However, as you rally over the next month, any sort of rally that you get out of these emerging markets that have shown real capitulation, out of Europe, out of the US, which has really been the best area to invest in, you still have to think that momentum has started to turn down so severely that any bounce should be used to sell. And a lot of this is based on weekly momentum that's really started to roll over. A lot of technicians use classical indicators such as MACD, for example. On a weekly basis, that's rolled over to negative now, and that's a concern. So on a daily and a weekly basis, the trend is now negative from late May. Any rally into July, August likely is not going to cause that momentum to go back to new highs. So you're going to see some divergence and momentum will gradually start to roll over. So as you get to the fall months, which oftentimes are very negative seasonally, we likely are going to see lower prices. So taking out of a page from Yale Hirsch from the Stock Traders Almanac, when you start to see things roll over in May, oftentimes it's right to sell in May and go away. Come back in September, October and revisit. But my thinking is it could last over the next couple of years, from a cyclical perspective, simply because we've had this big move up, and this is really the first sign of it starting to roll over. So,
you brought up that sell in May and go away, but we didn't see that sell. We didn't see that turn in May. So a lot of people kind of said, well, it didn't happen. But you had written about June, and that June historically could be a bad month.
June is equally as bad as September over the last dozen years or so, and stats have proven that out. So yeah, we have seen an official June swoon. We've got 6 days left now to sort of erase this loss. We're down about a little over 2.5% or so for the month. If we don't recoup this in the next few days, this will end the market streak of 7 positive months thus far. So it is important that we're down. My concern is really with momentum and the pace of the decline, not only with the US, but with the emerging markets. You're seeing a lot of things that are causing investors to get very skittish. And some of that might be miscommunication between the Fed and what the public really understands to be a prudent way of getting out of QE in a proper fashion. I think people are skeptical that the economy is actually getting better. We have seen a bounce in housing, but there are still no real signs of real growth. Unemployment is still high. So to mention any thought of getting out of QE, being that is probably one of the causes people would attribute to this rally overall, is a concern. Yeah.
All right, well, there you have it. As Mark said, June, which a lot of people don't realize can be as bad as September. If you do see some momentum or some positive movement in the market in July and August, he's suggesting you might want to take that time to get out while the getting's good before we get into September and October. That's Mark Newton from Greywolf, and I'm Deborah Borchardt with The Street.